How's everyone doing today? Welcome to another beautiful day, another beautiful trading recap video. To this week has just been a blessing. It's been so gracious. My setup has been working really fine, but I've just been having problems with executing. It's all good. It's good. It's actually good to learn. I like to learn every day. I like to improve my model every day. Try to improve my psychology because psychology with strategy is how a perfect trader is made. And that's what we're trying to accomplish with this trading grind series. This is my 10th trade recap video. I've been trying to be consistent, but I mean, the past few weeks, there was a tariff war, but it's all good that we're making the best of this 90-day tariff break because this is when the real traders come out. This March is always like a short, not like a short, but like a month where you have to like endure, have proper risk management, and know how to trade properly so you can execute and be able to use your trade for the ember months because this is when price action is the best. So without further ado, let's get into the video. So this week has been really good. I would say coming back because we've been bullish. Like I said, we have this liquidity right here. We're sweeping this liquidity, going all the way bullish right here. Try to take this out. Even if I go on FX factor right now, pull up for you guys. Yeah, everyone and their best friend is going bullish. You can't tell me that we're not going bullish. Doesn't make any sense. Still actually have people that are going short. I don't know why they're going short right now. It doesn't make any sense in my opinion. But I mean, go back to what we're saying. We've been in this bullish run, given that we have this 90-day tariff break. So it's just been good, and we're trying to make the best of it. And one thing we do need to know is that there will be some days that we would have price move in the opposite direction. And that's okay because we need to learn from our mistakes. That's good. It's just been good that I've been able to study charts and all, and we're almost there. We're actually like about, I don't want to calculate. I might give you the wrong one, but we're not too far off. I feel we're gonna get here. If I don't know how long the tire break is, but if we, that's actually really good because we're gonna break or we're gonna have relatively equal highs and lows. Or, yeah, relatively highs equal. So these are the lows, relatively equal lows, relatively equal highs as well. That was 2 years ago, but yeah. Today, good day trading. I had the perfect setup. I had all the things work for us. I even entered the market late. It's all good. Not like I entered like late. I just didn't open the charts as soon as possible. I like to wait because now I had to refine my strategy in such a way that I had to wait a few minutes after market New York session opens, like the stock exchange opens, so price can wobble up and go everywhere. So by 10, I'm usually looking at charts more often. I might start doing 9:45 just to look, but I mean, see. I also want to start checking the Zao, the gold. I didn't know that gold actually adheres to like Good Friday and the Holy Week as well. That's good. Yeah, we can take a break and like back test on it. More about today. Today bullish, same thing as every week. Monday bullish, Tuesday bullish, Wednesday bullish, Thursday bullish, Friday. Wednesday was a bit of a retracement, but was still bullish. Got it at the right time. Same thing here. So we're doing anything on we just did previous day highs and lows. That's what we did. Previous day highs and lows. On the 1 hour, let's do the 1 hour, 4 hour. I don't really like 4 hour. Like I said, Wednesday bearish a little bit. Like if I traded around this time, I'd have been bearish. We went bullish. So bullish for the most of the day. Continue to move up around Asian session, then bearish during London and New York session. That's basically it. So that's why I said we could have actually missed our trade, but it's all good. Same here. Found this liquidity in orders, moved up all the way. Your Asian session, same thing right here. Gain liquidity at London session around 4 in the morning. Use that, move up. We had some retracements, up, retracement, up, retracement, up, retracement, up, retracement. Finally, again, the momentum around here. This was around the time I got in. I got in at the close of this bearish mark. So at the close of the bearish mark. And one thing I did notice was that the spread was wide. I don't know why it was wide. It was like 1 to 2 pips wide, which is wow. I was surprised. I thought because maybe well, my analysis was that I thought because London session was closing, I thought that the pip spread would be wide. So I was just like, nah, that can't be wide. Pip spread is right. So just went on the 15 minute and see what we can get. We see this Asia session, we see this London session, we see this New York session. So you can see how highs, lows, highs. So one thing I really noticed is that when market opens, they tend to break previous day structure, meaning that let's say New York had this higher highs, right? You either break these higher highs or break these higher lows. And definitely we break the previous highs. Same thing with this. We didn't break previous highs, but we did break previous lows. So those are the things you need to do. We have to take out the previous session traders. That's all you need to know. Same thing with this. New York just broke highs. Asians is going to break highs as well. So those are the things. 15 minute, what did I see? This is what I saw. I came in the market around 10. I told you guys. So it was around 10. This is what I was seeing. I was seeing that market was going up, bullish, bullish, bullish. I already saw that we already going bullish. But something that I said that really caught my eye was that the bullish run was about fading out. 5 minute, because 15 minute I didn't really see anything. It was in the 5 minute that I saw that this bullish run was about fading. It was fading, and once I saw this big candlestick wick right here, no, this one right here, because it was really small, and we just had this like it was like a shooting star one. So I just knew that price was gonna retrace, and when we definitely did, we did retrace. We retraced all the way down. And when we do see, we saw this reversal. We called this reversal. We saw that price was gonna go to me upside, and I said, okay, let me see if I can catch like a retracement, because we know that this retrace. So what we know that our two retracement tools are gonna be fair value gaps and equilibrium. So I did both of them and saw that we were definitely retracing. So did a retracement tool on this. So our equilibrium was gonna be here. We did touch it 1, 2, 3. So that gave us the same continuation that we're gonna go in the same direction. Basically, that's what we saw. What do I like doing? I like seeing previous, like this move. We went bullish, right? What do we see when we went bullish? I found the order block and breaker block, so I used that as my take profits. That was good. I wasn't too sure because not like I wasn't too sure. I was just like, oh, let me just use my breaker block and order block as tools. So I had this fair value gap. Use this fair value gap. At first, I did have this fair value gap to give me the confirmation that we were going south. So we did have that retracement because I told you as market goes up, we have to have that sort of balance that gives us that move back down. That's basically what happened here. We went bullish to 3 bullish candles like this. Looks like giving us a fair value gap on the 15 minute, on the 10 minute, but or is it about this one? So this one I'm talking about, like this big black candle. Wow. You can't give us that. It has to be balanced. So that's what we keep the move up. Same thing right here. So 5 minute, we go in 5 minute, we see that price was going to go down. Price went down. We had this fair value gap. We used this fair value gap as our retracement. Could have used this one, but this was the best I could use. We saw this retracement. So when I saw price was going like this, I entered as soon as possible. So I entered around this black handle right here. But I saw price had done once up, once, twice. And third time I was like, no, we have to definitely go bullish. So I did go bullish. I could have gone bullish on this equilibrium, but I wasn't like too sure because, like I said, it wasn't like giving me that confirmation. And the spread was wide, so I wasn't like really too concerned about that. But it's all good. We learn from our mistakes. I didn't get into the trade, but I was able to find my good setup, which is good. But I don't know why I didn't get filled. Spread was like 2 pips, 1 to 2 pips. I was just like, why can't I get filled? And when I was looking at the bid to X price, I was like, wow. It's at like, it was basically like this. So price was like, let's say price was at 88. For instance, prices were 88. Price is here, right? I was now trying to buy it because I clicked buy it. It was at 90 something. I was like, wow. So I have to wait for price to get to here before it gets filled. I did wait. I waited for price to get there, but it kept on going up, kept on going up. So it was like I couldn't catch it. So it's like the chance of me entering was like very, very low. Except I went at market, and I don't really like going at market. I like to like have that faith that it's gonna come back there. But that's all good. Learn from it. I'm gonna try to do some back testing. I'm not promising, but I wanna see how disciplined I am. And without further ado, that's gonna be our video for today. You guys have a blessed weekend. You have a good day. Bye bye.